Hey everybody, good afternoon again. This is Lewis Johnson. I'm the Chief Investment Officer here at Capital Wealth Advisors. This is today's episode of our new educational and research offering we call 3 and 3. And today my goal is to walk you through three things we're watching that we think are important in the markets. So here we go. So first of all, let's talk about natural gas, one of my favorite topics. So here, what we demonstrate is the long-term price of natural gas, which did fall 90% over a 15-year period from $16 to about $1. This bankrupted the largest producers of natural gas in the U.S. as you had a step function change in technology. So the price crashed, people went bankrupt. This created what we thought was a favorable investment environment for us as value guys. So number one, the precondition for us was met. Horrible price action, very dour sentiment. So we start taking a look at the sector. And lo and behold, as we take a look at it, we found a couple of interesting things that were taking place. And so here, let's demonstrate that with the second chart, number 2. All right, number 2. So basically, this shows the price of natural gas in Europe. And what was interesting about this is you can see that there was a dramatic price increase on the later half of 2021. In fact, a price getting to 15 times as high as it was in the US. And this was, of course, late last year. So what was interesting about that from our perspective is that we believe that that was a pattern showing instability in the electrical grid that really began in California in 2018 with blackouts, Texas in February of 2021, I believe it was. And thirdly, showing up not only here in the UK, which we show, but also in Japan and actually China, very high prices. So what this led us to believe was that not only was there perhaps an investment opportunity that was unfolding in terms of something that had been bad for a long time, but we could see this underappreciated, what we thought larger theme of all this craze for renewables actually creating instability within the grid. Because remember, the sun does not always shine and the wind does not always blow. So as the electricity kind of surges and surges back and forth due to these renewables, this was really, in our opinion, creating unanticipated problems. So then I'd like to highlight, of course, what took place here, this largest spike. We all know what took place on basically late February of this year. Mr. Putin chose to invade Ukraine. And this is a huge deal because Russia accounts for 25% of all the natural gas that's consumed in Europe. So the bottom line of what I would say is this, is that we had a 15-year bear market in the US, prices went down 90%. Then we had a very compelling multi-year supply and demand outlook that was very favorable before Mr. Putin ever rolled his tanks into Ukraine. And at that point, the supply and demand balance kind of became hopeless. And so what this meant for us was that we believed that it was a great idea to invest in companies that would benefit from solving this problem. Because remember, we try to invest in solutions. And so it's our opinion that that part of the solution in terms of creating new supply to meet this huge price opportunity in Europe and frankly in Asia as well is for U.S. natural gas companies, for companies that that make, for instance, liquefied natural gas, and for the infrastructure that makes that happen. We felt like this crowning catalyst of the invasion of Ukraine, we think it's going to create a multi-year opportunity for companies that can profitably solve problems in that area. So that's why we're interested in these companies, and we wanted to share that with you on today's 3 and 3.